Hello everyone. Yesterday, Indian stock market was very eventful. Reliance was down, HDFC Bank was up significantly, and RBI made the hawkish statement, etc. So in this video, let's discuss all those in along with relevant pre-market report for today, 9th August 2024 for the Indian stock market in terms of Nifty and Bank Nifty. First of all, about Reliance, yesterday it was down over 1%. And the main reason for that is because of their annual report release. I mean, in the financial year 2023, the total employees of Reliance Group was 2,46,000. That in the last financial year dropped to 2,07,000. So, in 1 year period, the total workforce from the group was down by 11%, and majority of them was expected from retail segment of the business, which didn't go well with the investors, and also it made the stock negative. Now regarding HDFC Bank's positiveness, some US brokerage increased the HDFC Bank's ADR target price to $67 per share, whereas at the time of Indian market trading, the HDFC Bank ADR was below $60 per share. So near 12% upside potential. Here they cited the reason that HDFC Bank has edge over the other Indian banks in terms of retail asset quality. Hence only on Wednesday night, despite every other major Indian ADR was down, but HDFC Bank. In fact, in addition, yesterday RBI warned and requested the other Indian banks to be vigilant in terms of retail assets quality. So I guess all these supported the HDFC Bank on the positive side. Now coming to RBI's interest rate decision, I genuinely expected the 25 basis point interest rate cut, but as like June month MPC meeting, only two MPC members, Ashima Goyal and Jayant Verma, for the second time in a row voted to reduce the interest rate. But the other four members still voted to pause it. So RBI kept the interest rate unchanged for the ninth time in a row with the stance of withdrawal of accommodation. Then on the GDP growth rate projection as well, RBI maintained the same as previous 7.2% for FY 2025, which already most analysts expected it, so no issue. But the problem is on the inflation side. If required, please pause and have a look. Earlier for Q2 FY 2025, RBI expects the inflation to be around 3.8%. That now increased to 4.4%, and the same way Q3 consumer inflation also increased from 4.6 to 4.7%. However, don't know how RBI magically reduced the Q4 inflation from 4.5% to 4.3%. In this way, they can able to keep the whole financial year consumer inflation projection same as the previous one. I mean, I don't know what to say. I'm not the economist, but even for my bare eye, I can read this. In the near term, we can expect more inflation, and RBI hoping it to drop in Q4. Basically, what they are saying is they are not going to cut the interest rate in the near future as well. And also, there was a significant discussion about deposit growth in the banks. So, reducing the interest rate won't increase the deposit rate, which market took it hawkishly. And in addition to this weekly expiry, yesterday Indian market was very volatile with a negative bias. About institutions, for the 5th straight day and 11th session out of the last 13 sessions, I mean after budget, FIA was the significant net sellers. Yesterday, the net sold for 2,630 crore rupees, whereas so far in the last all 12 sessions, to some extent, DA did match the selling on the buying side, but yesterday they didn't match. They bought only for 580 crore rupees. So as a net institution, about 2,000 crore rupees was drawn out of the market. Those are the quick takeaways from yesterday's market. Now let's move to the US market. The situation was completely different there. I mean, before their market opening, the number of weekly job insurance claims dropped from 2,50,000 a week ago to 2,33,000, which was also less than the analyst projection, which in turn made the US market super positive. Dow Jones increased 1.76%, S&P 500 up by 2.3%, and Nasdaq rallied 2.86%. In case of VIX, it dropped 14% and moved down from around 28 to 24. So the whole week was really a roller coaster ride. One day significant up and another day significant down. Anyway, it is what it is. Moving on, in line with the US market, GIFT Nifty from around 24,100 at the time of yesterday Indian market closing Early morning today, it increased to 24,376. Here is the tricky part. During this whole week, it's not just market went up and down, even the future market premium also going up and down significantly. Like for example, yesterday when Nifty spot market closed, there was no premium at all. Generally, for this day of the month, the premium should be 70 to 100 points. If there is no premium, then it's an indication of weakness in the future market. However, that also not sustaining. I mean, if we consider no premium for today means GIFT Nifty indicating the gap up opening of 250 points, but I don't think that will happen because now the global momentum improved. There is a high chance that market might start factoring the premium today. So we can expect a gap up opening of around 150 points rather than the 250 points. Regarding Indian ADR, ICICI Bank, Infosys and Wipro, all those three in Indian market, it closed significantly negative, especially Infosys which was down about 2%. But in the ADR market, all those three turned to be positive of around 1%. Whereas HDFC Bank ADR's Wednesday positive was factored in the yesterday's Indian market, and this 1% positive is fresh. So overall, ADR also in line with the GIFT Nifty indication. Regarding oil, not much change. Brent crude closed at around 79 US dollars per barrel, whereas WTI crude trading around 76 US dollars per barrel. These are the things happened yesterday in the global market. Now let's move to new Indian market specific info. First about Reliance. I don't know whether it's positive or negative, but I will tell anyway. There was a news that Reliance Industries agreed with the Venezuela that instead of paying them the dollar for the crude oil, they agreed to pay by naphtha, which is one of the refined product of crude oil. It looks like a good deal. Let's see how market reacts for it. Second, about quarterly results. On the top line, Cummins India and Eicher Motors beats the analyst expectation, whereas Gujarat Gas and Gland Pharma missed the expectation. So all those four companies will be on focus. Though the Gland Pharma got some negativity, the other one, Aurobindo Pharma, received approval from US FDA. So probably pharma sector will be mixed today. Third, market intelligence company Nelson IQ released the report about FMCG volume in India. As per them, in the March quarter over quarter, FMCG volume increased 6.5%. But that in June quarter, it increased only by 3.8%. And the drop mainly comes from urban areas, whereas the rural side, the demand was intact. I mean, 3.8% quarterly basis, I think it's okay according to me, but that report mentioned in the negative sense. Either way, today, FMCG sector will be on focus as well. As a summary, US market closed super positive. In line with that, both GIFT Nifty and Indian ADR all indicating the gap up opening of 100 to 120 points. Sector wise, IT and banks looks okay, whereas pharma is mixed and not sure, but FMCG looks negative. Let's see. About the things to look out. Today early morning, Chinese consumer inflation is due. Then during our market time at 11:30 am, Germany's consumer inflation are some of the important items we need to keep an eye out today. Coming to technical, Nifty opened 50 points gap down and it was volatile but managed to hold 24,000. However, didn't break out on the upside either and settled around 24,120. Thus, on the daily chart, Nifty formed a bearish candlestick pattern with minor upper shadow. I mean, from pure technical perspective, mostly it's indicating negative. Starting with both RSI and MACD momentum indicators are maintaining the negative bias. And Nifty continued to trade in the Bollinger lower band. In addition, on the hourly chart, there is a clear indication that the momentum indicator has completed its pullback and started a new downside cycle. So as I said, technically all indicating that the weakness is likely to continue. Here, the 24,400 level, which is near the current week's high, is expected to be crucial for further upside towards 24,700. However, 24,000 to 23,100 range is expected to be key for any downside going forward. In case of Bank Nifty, it opened 70 points gap down. However, outperformed Nifty and closed at around 50,160. Thus, on the daily chart, Bank Nifty formed a small bullish candlestick pattern with upper and lower shadow. However, as long as it's below 50,350 level, I expect the weakness to continue. On the weekly options front, the maximum call option open interest was at 24,400 strike. followed by 24,500 and 24,200, with maximum new call option writing at 24,200, 24,100 and 24,400 strikes. On the put side, the maximum open interest was at 24,100 strike, followed by 24,000 and 23,500, with maximum new put option writing at 24,100 strike, and then 23,900 and 23,700. Thus, from options data, 24,400 is expected to be a hurdle on the upside, while 24,100 to 24,000 is the immediate support zone. So that's all in this video. Hope you all got some information. Please consider subscribing the channel and liking the video, so it will help me build the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.